Hello everyone, welcome back to another market review on the NASDAQ, September contract 2025. We are doing September 3rd today, so it's just going to be a quick one. Didn't get a chance to do it last night, but nonetheless. Let's start with the weekly chart on the NASDAQ. So again, so far this week we've attempted to trade below 310 level, our main threshold on the weekly, and after testing this level a couple times, we've begun to trade up a little bit higher. This is the daily chart. I've added a couple levels here, same order block and south side imbalance here with the weekly candle marked with a fib, but I've added that same imbalance that we were discussing in the previous video. I want to see how we would react inside this range to see if we could start to trade lower. And so far this day we tested the low of it, hit the mean threshold at 310 again, and then began trading up a little bit higher. Now this red level in here would be a volume imbalance. There is wicks here and sell side delivery with bodies, but there's no buy side delivery. So in other words, there's no up close candles in this range. So that's why I believe it's begin drawing back up into that range for a retracement. Let's drop down to the 4-hour chart. We can see that after our south side liquidity draw was purged, we began trading back up higher into the range. I told you to watch this 4-hour south side imbalance to see what we'd do at the open there, and all we did was trade back to the low of it, the mean threshold of the weekly, and then began trading higher. It just bounced between these two levels here throughout the middle of the day, and then towards the end of the day we began to trade higher towards that volume balance, and have a rejection block marked here as well. I'm still feeling bearish, but this is a bit more of a retracement than I would have liked. It could have, ideally it would have, sold off at the low of the daily buy side imbalance, but instead we're getting a retrade back up into that volume imbalance here from the daily, and I suspect that it may try and reach up into this SIBI here. We didn't want it to get traded to, but if that ends up happening, I want price to stay below half of this range so that we can still get that bearish kind of idea going. The only thing that would cancel this bearish idea out is if we get up above that volume balance and start closing in that range and really show some strength through this imbalance. So this imbalance here is going to be the key for me. The hourly chart, we began trading lower, trading softer after the week started there. Tap that SIBI on the 4-hour, sold off from this sell side imbalance, and then tagged the high of that daily buy side imbalance that we were watching, and melted down through there and did our low retracement, and then began consolidating here. Kind of put in a short-term reversal idea on top of that mitigation block. So seeing it consolidate here, rally up, and then get one more push into that rejection block and volume balance. Should have sold off heavier here if we're going to continue bearish on that day there. But instead we created a low on top of the mitigation block and began drawing higher. So rejection blocks are definitely short-term drawn liquidity based on this chart. 15-minute time frame. I have the Monday high marked out, dropped down on Tuesday, did a double purge of the Friday low from 822, rallied higher, created the new day opening gap there, and then consolidated all through Asia inside of our hourly mitigation block, and traded higher, consolidated, ran up, and then began breaking down here, and it was able to give a nice sell-off for the day, which I was able to be part of. And after we returned down to here, I had suspicion that they were either going to pump it up one more time or just waste time until the next day to sell it off. But instead they decided to rally it. Okay, let's drop down to the 5-minute chart. Again, we looking at a market maker profile here. Depending on the profile of the day, or how I'm feeling for the day, we may try and do one of these in each of our videos, depending on if there's anything notable to talk about. So we're consolidating all throughout pre-market, kind of a seek and destroy profile here. It rallied and ran the highs here, dropped down below short-term south side, try to get a rally, dropped into south side with these bodies again, and then ripped up real hard on the 10 o'clock news there, and broke a swing high. So the market structure shifts to bullish, and you retest this down close candle, you would want to be a buyer, rallying up into the buy side liquidity from Monday. After we ran the buy side, we started doing a consolidation, and then begins breaking down. This is our most recent fair value gap in premium of this range. So any premium fair value gaps that we suspect to be of interest on the sell side of the curve, we want those to become inversion fair value gaps. Okay, so from this low to this high, we're at a premium inside this fair value gap. So price would have had to be extremely bullish for us to get another rally above here. We tested the low, the lows in here that is created a couple times, and then finally got a closure through that fair value gap, which became inversion. This is our first indication of a bearish idea. We don't get a market structure shift all the way until down here, but nonetheless, this would be a good selling opportunity if you understand narrative. We dropped down and closed below our market structure shift low with the south side balance. Mark that out and draw it out in time. Spend a lot of time, every time we trade up into this range, we're respecting, the constant encroachment of this level, but we're not creating south side imbalances on the way down, if that makes sense. So we drop into here, we rally up, test it, break the low, no imbalance. So it runs up again, takes some more liquidity, breaks down again, no imbalance, again below the lows. So one more time, finally, after kind of reflecting the idea of what was going on in the pre-market in the lunch hour in the afternoon, we finally run up one more time and close above that constant encroachment level, which previously would be something that would scare me out of a trade, but over time, unlocking the narrative, we get a better understanding of what's going on, and watching this level is important because this is our area that would be of concern if price decided to trade through that, okay? So we're getting suspect of this level, but until we get a closure above that wick, it's nothing really to be worried about, and we finally get that sell-off after scaring out traders, dropping people in longs, and then finally roast them, and we get that sell sign balance finally below the range low. It doesn't always have to be at the range low, but in this case it dropped 3 times already. So if we're going to be on side, and if we're going to be looking for expansion to the downside, we want that imbalance to show, okay? And it gives a retest of that imbalance, and it finally sells off into the London low there. So every time we created a low there, it was not telling smart money that it's time to sell off yet, pretty much. There's no imbalance here or here in this range. So there's nothing for smart money to fill the numbers with, if that makes sense, and in order to sell off. But again, break down your price charts every day and you'll begin to see things like this repeat. Dropping down to the 1 minute chart, there's not a whole lot to add here. I just wanted to make it fully inclusive for the review. So we have these same markups from the 5 minute onto the 1 minute chart. So spend some time studying that, and especially this order block here. We were watching that and we're able to capture shorts, even though they were early. We were able to capture some shorts there, and by the time it came back on me, I was able to stay in line with the narrative, so long as this high wasn't broken or violated this high in any way. My bias stayed bearish. Alright, so that's going to be it for today. I'll catch you guys later this afternoon for a review on today's price action. Hopefully you enjoyed. If you have any questions, please leave a comment, and always remember to like and subscribe. Thanks guys, see you later.